All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to take a look at a stock right now that I'm playing. All right, I'm looking at GE. This is General Electric. And in full disclosure, I am currently short this stock via options. But I'm going to go over kind of why I'm short. All right. Not saying that you guys need to go short, but this is something that's definitely on my watch list. Now, I'm going to start doing some of these different trade ideas on, individual stocks and a little bit more of a broader range of things. If you guys enjoy these type of videos, let me know in the comments down below and I can start doing more of these. Typically, I focus on, viewer requests as well as TLT and also, commodities such as gold and natural gas. But if you guys want to see some more of these kind of individual trade ideas that I'm looking at, let me know and I'll be happy to do that. Okay, so we're going to go into the weekly time frame chart. All right, that's the first thing we're going to look at. There's a macro trend line right now that we're retesting, possibly getting a break and retest of. And potentially getting this ABC structure to the downside on General Electric. We also have a daily chart setup that I'm looking at with a few bearish signals. We also got a very big bearish engulfing candlestick today on top of its earnings. They reported earnings. So before we dive into that, okay, full disclaimer, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this YouTube channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. We're going to go ahead and hop into it now. And as I mentioned, we're testing this weekly chart macro trend line. So this right here is actually 2009. This is the great financial crisis over here. All right. And we can see we hit these extreme lows, right? There's a huge tank in the share price of GE. And we established a little bit of an upwards trend line here. And we bounced here and then we broke through and we retested it, fell back down below here, retested it again, fell back down below here. And now in 2023, again, we're retesting that trend line. Now, it is a little bit of a risky play because the more times you test a trend line or the more times you test a level, the weaker it gets, right? So we've tested it about 1, 2, 3, 4 times, and this is now the 5th time. So there is a chance we could break through here and flip it back to support and head up. Right, if we do that, 116.99, so basically 117 and 136.28 are going to be some of the bullish price targets I have to the upside in case this thing continues to go bullish. Right, those are going to be some of the major levels. And the reason being is that those are the 3 major Fibonacci retracement levels, the 61.8, 50%, and the 38.2% retracement levels. These are the 3 most common and well-respected, and you use these to identify trend continuation versus trend reversals. So the trend continuation would be this A wave down, B wave retracement, and then a C wave continuation to the downside. All right. But you can also use them to spot reversals, right? So if we move down, retrace, and we start to consolidate and break through these levels and flip 136.28 from resistance to support, then there is a chance that you could get a reversal, right? And come back up and potentially retest some of the previous highs. So I have to keep an open mindset, all right, and not be too biased just because of, one specific thing that I see. Now, on top of that, the MACD is also this yellow dotted line right here. This is a high that we have not seen on the MACD. We haven't tested this high. We're actually above that high right now in over 10 years, right? I believe really on the MACD, it's about 20 years. We haven't seen highs on the MACD, this highs in over 20 years. So that lets me know that, hey, this thing is been very, very bullish. If you took a look, right, this thing went from, roughly about $50, $45, $50 all the way up to $97. And it did that in the middle of a bear market, guys. Now, the bear market could be over, right? There is a possibility that we could be starting a new bull market trend. But for now, we haven't really got confirmation from that in the broader market in the S&P 500. So, when you take into, those effects, we really have just seen a tremendous move up in this stock. And, I think that, because the MACD is so high, the RSI is also extremely high at levels that we haven't seen since 2011. It's 2023. So the RSI is at peaks that it hasn't seen since, over 12 years. If you take a look, this was the last peak and we had a sharp drop to the downside afterwards. Then over here, when we came back and retested those levels, you see we had another sharp drop. Over here, the MACD was at those levels. We ended up seeing us drop And here again, when the RSI hit this level again that we're at currently, you can see it consolidated in this range for a while, but ultimately it had another sharp drop. So if history wants to repeat itself and we end up rejecting this trend line again, as history repeats itself, and if we come back up to this level and see a drop afterwards, then we're going to go over the price targets that I'm looking at, all right, in the short term, right? So if we zoom in now to the daily chart, okay, here is that bearish engulfing candlestick that I was mentioning. Typically, a bearish engulfing candle is a bearish chart pattern, right? Or is a bearish candlestick pattern. Now, and it usually leads to further bearishness. Now, if you take a look, we held our support level here right around 97 very well and ended up closing up above it. But if the bearish candlestick, the bearish engulfing candlestick ends up playing out, most likely we are going to break through that 97.50 support area. Okay. So right now, that's a big area of support. All right, you see we had prior resistance here when we hit that level and then fell back down. That prior resistance is now new support, and we did bounce there today. If we end up breaking that, okay, 38.2% retracement, 50% and 61.8% retracement levels are going to be my targets for a pullback, right? A pullback to all of these levels is very healthy, right? And we went over, the Fibonacci retracement levels and looking at the move up, the retracement continuation higher. So, if this stock wants to continue going higher, it could, but even a whole pullback down here all the way to 75 is still considered a healthy retracement for this to try and continue an uptrend. So if we do end up getting bearishness and break below this 97.50 level, this is kind of where the stock is going to be drawn towards. Now, we also have some things known as bearish divergence along the MACD and the relative strength index here. So if you take a look, we have a high, we have a lower high, we have a lower high, right? Meanwhile, the price of the stock had a high, a higher high, and then a higher high again. So, clearly we can see that the stock is in an uptrend, the price is going up, but the RSI is going down, creating lower highs. So when that happens, that's a simple term known as bearish divergence. It's something that technical analysts such as myself look at as possible indicators of future bearish activity. So that's about one signal right here that we could get some type of a pullback. A second one is also going to be that MACD. Okay, if you take a look, we're seeing the same thing. We're seeing these higher highs, but we're seeing lower highs on the MACD. So the MACD is also going down, creating lower highs. So that's about two things indicating we could get some possible bearish activity. Number three is going to be that bearish engulfing candlestick. That is a candlestick pattern that typically leads to further bearishness. Now, none of these strategies are 100% guaranteed, but when you are able to start combining a couple strategies together, such as 2 or 3 or 4, then you can really have a little bit more confidence in your play and a little bit more confidence in your trading. If we wanted to draw a trend line here, okay, we could look for a trend line break, and essentially look for a break of this trend line right here as confirmation that we could potentially head back down to these major retracement levels here of 85.33, $80.54, and 75.75. So, this is why I'm watching GE. We kind of went over the more macro chart on the weekly, then we looked at the daily right now. All right. And we kind of zoomed in on that. If you guys are interested in more types of these videos with different kind of individual plays that I'm looking at currently, or some of the plays that I just got in recently, I'll be sure to tell you guys, if I just hopped in a play or something, so that way, I can be fully transparent with you guys. Also, I do one-on-one coaching sessions. So, if you're interested in learning more about, some of these different technical analysis, things that I look for, or even how to set your screen up the way that I set my screen up, some of my favorite indicators, and you want to walk through in that. Or perhaps, you have, some different stocks that you guys would like me to do some technical analysis on and give you guys my thoughts personally, and kind of go over any indicators or any, possible signs of bullishness or bearishness that I see in the chart. Feel free to email me at zachleytrades@gmail.com, and we can go over trying to set up a one-on-one session. All right, we can do that via Zoom. All right, so that way, we can share the screen with you guys, and we can kind of just go over, and if you have any questions, you can ask me them while we're doing it. I do 30-minute and 1-hour sessions. So again, just email me, zachleytrades@gmail.com, if you guys are interested. With that being said, I'm out. Really appreciate you guys making it this far in the video. If you did, most likely you're gonna enjoy one of these next two videos as well. So be sure to click on one of those, smash the like button, and subscribe to the channel.